Hi, this is Gary.
And this is Greg from M8.
Today we are here to give you a brief update on the Singapore property market and some of the key events that have taken place in the month of March. First of all, let's touch on the HDB market. Resale prices of HDB flats have stopped increasing for the first time since June 2020, holding steady in February 2023 compared to the month before, according to flash figures released by SRX and 99.co on Thursday, March 9. Notably, the prices of larger flats fell, with the resale prices of 5-room flats and executive flats dropping 0.8% and 0.3% respectively. Property analysts have attributed the decline to lower demand from private home buyers or downgraders who have been affected by the new 15-month waiting period requirements. In contrast, 3-room flat prices grew 0.3% and 4-room flat prices held steady. Resale prices in both mature and non-mature estates dipped by 0.1%. So for those who are on the lookout to purchase a bigger size flat, may seize the opportunity and timing now, and you may be able to purchase one at a lower price. However, these figures are based on February figures, and resale volumes typically falls in the month due to seasonal factors. Therefore, if you are thinking of taking action, do move fast.
Alright, now let's move on to the private housing sector. So actually, real estate developers sold more private housing units, and this excluding executive condominiums in February 2023. So a total of 432 private housing units, excluding ECs, were sold in the primary market in February 2023. So 10.5% more units compared to the preceding month. So this is in spite of a slight dip in the number of units launched in February itself, and developers released a total of 401 units for sale last month, 2.2% fewer than the number of units released in January. So out of the 432 private housing units sold in February, 222 of them were actually sold in the CCR, or rather the core central region, primary market, and this is more than double the 107 units released in the CCR last month. So one reason for the higher sales in CCR region is that some of the prime condo projects are expected to be completed this year. So this includes projects such as House on Handy, Copa and Newton, as well as Lucia Residences. So this will actually attract buyers who prefer to buy projects that are nearer to completion or actually newly completed. By buying such properties that are nearly completed, the buyer could take the keys to the property shortly after the purchase and retain their preference of being the first owners of their property. And the CCR primary market is also witnessing more Singaporeans buying properties in the area, as Singaporean buyers actually account for about 2/3 of the CCR housing units sold by developers last month, an increase over the 56.2% of units transacted in the CCR primary market in January 2023. So despite this, there's actually a good chance that the CCR prices will continue to rise as the continued influx of overseas family offices and high net worth individuals from countries such as China continue to flock back to our island upon the reopening of their borders.
So in other news, the new launch market saw quite a bit of movement as well in March, as two highly anticipated developments, Botanic at Dairy Farm and Terra Hill Residences at Pasir Panjang, were launched. Botanic achieved a sales rate of almost half of its 386 units, selling 187 units for a total of 48%. Most of the smaller configurations, mainly the 1 and 2 bedroom units, were fully sold on launch day, while almost 20% of the bigger configurations such as the 3 and 4 bedroom layouts were sold on launch day as well. Given its proximity to the nearby German-European School and Dairy Farm Nature Park, the project appeals both to investors looking for rental yield and own-stay buyers who wish to stay in slightly more tranquil environment away from the hustle and bustle of the central areas. This also shows demand for investment in the real estate market, despite recent news of another potential global economic crisis in the face of collapse of Silicon Valley Bank, as well as Credit Suisse. Buyers with the capabilities to afford properties are still in the market looking for value buys, while larger unit configurations might take a longer while to be taken off the shelves, as own-stay buyers potentially look to wait out the potential economic downturn or review their finances before committing to such a big-ticket purchase.
So similarly in the case of Terra Hill Residences, 38% of the units were actually sold on launch day itself, as the development looks to set a new benchmark price for future RCR projects to follow. So average launch prices at Terra Hill were well over the $2,650 per square foot mark, and despite the seemingly lower take-up rate, it is key to note that there are no one-bedroom configurations at Terra Hill itself, which could be seen as a factor as to why the percentage of units taken at launch day for Terra Hill actually seems lower. So if you have been keeping track with the new launch market take-up rates, you'll realize that relative to past years in 2022 and 2021, where take-up rates for new launch projects are crossing the 70% mark, take-up rates for projects this year might all hover around the 40% mark on launch day itself. This is due to the fact that there are a grand total of up to 12,000 potential units that will be launched this year alone. So this gives buyers in the market a wide variety of units, location, sizes and layouts to choose from, as compared to past years where demand grossly outweighed the supply. To end off, for buyers interested in purchasing a unit in the East, the first big launch of 2023 in the East will be Tembusu Grand, a 638-unit project situated in the Tanjung Katong area. Prices are expected to start from $2,296 per square foot. So in our opinion, this could be a good opportunity for buyers who are eyeing the District 15 area, as the developers could be more cautious with their pricing strategy, given that there are two other developments, Continuum at Tembusu Avenue and Diamond Grand Residences at Dakota. Within the vicinity, there are potential sales competitors. So, furthermore, given that Continuum and Diamond Grand will yield 816 and 1012 units respectively, there appears to be stiff competition as east side buyers will inevitably be split between these three projects and their respective pros and cons.
So that's it for this month's newsletter video. If you found it useful, do give us a like and share this video with a friend.
This is M8, and we'll catch you in the next video.